dignitaries present in the audience, ladies and gentlemen. It is really a great pleasure for me to be a part of Credit Summit India 2017, and I will attempt to put together for you the brief context of the changing landscape, which is having a significant impact on all of us in the world of credit. And that is the theme of my subject, Changing Landscape of Credit. Now, when we look at credit and credit concepts, briefly, there are 7 sorts of credit risks that are, or let me say risks that are often talked about. Number 1 is credit risk, which is underwriting risk. Number 2 is interest rate risk. Number 3 is liquidity risk. Number 4 is operational risk. Number 5 is compliance risk. Number 6 is regulatory risk. And number 7 is strategic risk. Strategic risk, as all of you will understand, is the direction in which we take the organization. If we don't take it in the right path, we could very well be reaching a Kodak moment. Now, all these 7 risks are, to most professionals in the sector, well understood. And I'd like to move on from these 7 risks. The important thing for us to note is how is the landscape changing in our lives, and what are the new sorts of risks that are going to come at us, and how we need to deal with them is broadly the theme of today's discussion as far as I'm concerned. For this, I'm going to use the benefit of this scratchboard in front of me. Number 1, when we say what is changing around us, the first change I'd like each one of us to recognize around us, as we see as banking practitioners, as lending practitioners, is this. We find that the demographics of the borrower is changing. What is happening in demographics? We find that in the 1990s and 2000s, when we were lending money, most borrowers were in the age group of about the 40s. It rapidly shifted to the 30s, rapidly shifted to the 20s, and now we are finding that even college students are borrowing against their pocket money. So you can see that the age of the borrower is coming down like this at the time of borrowing. Parallelly, what is happening is that people are living longer. So when people are retiring at the age of 58, lenders usually used to make programs whereby the loan repayment will end at the age of 58, because it is assumed that at 58 the customer cannot pay your installments. For self-employed people, the usual benchmark used in our banking world or lending world is 65. We assume at 65 the customer is not going to be able to pay your money back after that. But that's not true anymore, because retirement ages are expanding. I often tell our own organization when we are underwriting loans, saying that, why are you so fast at the age of 58? Is it that at the age of 58, customers stop going to pay your installments? If the customer took a home loan and he became 58 and there is still a tail of 20% of the home loan still pending, do you really think the customer is going to default for that 20% after having paid 80%? No. So therefore, our own understanding that 58 is anyway becoming 60, and anyway customer is not going to default after paying 80% of the loan, so can we relax our own norms to extend the tenor beyond 58 even if it is self-employed customer? For salaried, it is not 65 anymore, because people are living longer. We all know longevity has gone up at least 10 years in the last 20, 30 years. And therefore, retirement age for self-employed people is no longer 65. 65 is very young. So, parallelly, the age of the people at retirement is increasing. And therefore, this is causing one new way of underwriting that we will need to do in our own system. Number 2. When we look at the next set of change that is happening around us, you will see that the ecosystem has changed. When we say ecosystem has changed, we were earlier living in a certain ecosystem which is largely physical. Now, at the same time, within the last 8 or 10 years, we find that you got a large Aadhaar platform that has come up, which Mr. Ghosh referred to. You find that there is a mobile phone explosion of 1 billion mobile phones. You find a social media that has become a significant factor. You find that the credit bureau has become a significant factor. To think about the implication of this combination. The implication of this combination is that whether we were writing for a situation which is physical, we are in a position to get a lot of credit bureau information, and from the credit bureau information, you get the customer stability, you get what is the customer's address and the address stability, you get to see how many inquiries for loans the customer has done, you know the identity of the customer, and you know the kind of trade lines or loans availed by the customer already. From the Aadhaar, apart from identity, which is a big thing, and anyway it's a biometric identity, you also know the address, you also know the age. From the mobile phone, you know the transactions. And from the social media, you just know a lot about the customer's conduct and behavior elsewhere in the system. So, when you put these pieces together, you will realize that there is a change happening here about how our own ecosystem is changing. The third change that is happening around us is what is happening to the tools. As far as tools are concerned, from a situation which is largely, let me say, judgmental, it has moved a lot to, let me say, machine learning and artificial intelligence. And this machine learning, artificial intelligence is not just a fad word of the day. I can tell you every single institution is working on this. For example, the traditional way of availing a loan just 15 years ago would have been the customer will apply for a loan. You will ask the customer, what is the first question you will ask the customer when they applied for a loan? Anybody from the banking system. You will ask for the customer's income tax return. It's not so anymore. A lot of loans of 20, 50,000 rupees or 100,000 rupees are given without asking the customer for an income tax return at all. That's a fundamental change in the way loans are being processed in the country. So, how is it being done? A big significant change is coming in the form of machine learning and artificial intelligence, because based on the information, maybe some demographic information, maybe that the customer is married or not married, whether what the customer's age is, maybe the customer dependents the customer has, maybe this sort of information which is not really, in a traditional sense, would not try to give you a sense about whether the customer is good for credit or not, you can find it out. Or you can have a certain statistical way of thinking about it. The fourth factor that is changing everybody's life is the government policy towards digitization. I can tell you that this is making a huge change in our lives. What is the change? When we say that a lot of transactions are being digitized, then the customer's trails, the customer themselves did not know that it's a valuable information for someone to evaluate them, give them credit. Customer did not know is today deemed very valuable by the lending system or the banking system. So the amount of digitization is a material factor. Last year, for example, demonetization happened. There were lots of views about demonetization, but I was definitely a very strong supporter of it, because suddenly we found that a huge amount of digitization happened, and a lot of people who dealt in cash, a lot of traders or shopkeepers who dealt in cash, they brought the money to the banking system. We know the amount of money that came into Jan Dhan. We know the amount of money that came into the elsewhere accounts. Suddenly, the whole system came alive in terms of banking transactions. With the demonetization, and coupled with GST that happened just about 3 or 4 months ago, suddenly a lot of information just surrounding the parallel economy has now come to the mainstream economy. So you take that as a fourth factor as the country's digitization. We know the app that is coming through in the form of Paytms and the other applications. We know the how Beam has taken over. Beam is one of the most phenomenal applications I have seen, one of the most customized applications which I have seen, whereby you merely log in and from the mobile number on the bank's records, it picks up everything and starts doing transaction person to person without an intermediary, without the money going and sitting in a wallet. Now, clearly, digitization is a big role that it's playing. Now, what is the impact for a lending system? To all of you, let me just say that the impact is huge. For example, it was very common knowledge among all of us in the lending community that when a customer applied for a car loan or a home loan, if the installment of the car loan was, say, annual installment of the customer was, say, 3 lakh rupees, the system would accept to give the loan to a customer even if income tax return was just 100,000 rupees, which means that the declared income of the customer was lesser than the annual installment of the customer, and the system was accepting it. And the loans are behaving pretty well. Why? Because it is always assumed that a certain amount of income is not disclosed by the customer, and the banking system adjusted for it at the time of lending. It was funny, but it worked. But now, with this amount of digitization, everybody will have to reorient their norms and say, hey, the income that is shown that is pretty real or as close to real as it can be, and therefore the norms will need to be changed. So I can tell you there is an impact change that is happening as a result of digitization. The fifth factor that is playing a role is the new emergence of new payment mechanisms. Just a few years ago, not very long, just 5 years ago, a customer would make payment to a bank, repayments, either in the form of cash, or by coming to the bank or a bank's designated branch, or by going to internet. Today, and especially after demonetization, the number of institutions and entities through which we are collecting is quite large. At Capital First, for example, we were collecting, just to share data with you, we were collecting about 8,000 collection repayments from customers through electronic means pre-November 2016. Post-November 2016, right in December, this jumped to 32,000, a 400% increase. It saw one shot as a result of payment through, let me say, the Paytms, the MobiQuicks, the FreeCharge, that community. Then you had the traditional internet banking, you got the M-Pesa, got Ola Money, you got Airtel Money, you got Jio Money. So basically this ecosystem of, let me say, payment world has dramatically changed, and that collections has improving dramatically. If you are a lender, therefore, this has a huge implication for you. Now the sixth impact is the kind of lenders who are coming to play. Because earlier it was banks, then it's banks and NBFCs, now it's banks, NBFCs, P2P players. So let me say the sixth impact is coming in the number of kind of players. It's making an impact. The seventh impact that is coming off late, particularly the last few days, is the impact on privacy. Because a number of people are saying, how will this impact on the judgment by the Supreme Court affect our lives? I have tried to think hard and deep about this over the last 2 days and try to read up as much of the material and public information available, which are rather synthesized because the judgment is hundreds of pages long. And one of the key things that is coming out is that it doesn't appear at anywhere in the system that people are saying don't do algorithmic lending. Algorithmic lending have been done all over the world, even in countries where privacy issues are very pronounced and very important, like in the case of US and other developed countries, even there algorithmic lending is being done. So nobody is saying don't collect data. Nobody is saying don't use algorithms. That's not what the court's position is. But the court is saying have a process for, have a policy or a data policy for being able to collect data, store data, and use data. And that is one of the key issues to deal with, and this will have significant impacts on us in terms of the responsibility lenders will need to have in being able to deal with customer data. Because we indeed understand the whole system. As a consumer, you will genuinely be very worried today saying that your information is available in all apps. You must have at least 10 or 15 apps on everybody's phone, and every one of the app before you download it says, can I have access to your mobile phone? Can I have access to your contacts? Can I have access to your SMSs? Can I have access? So you're giving lots of access, and you're clicking yes, 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 yes to everything, because otherwise the app doesn't work. So basically, you do feel somewhere at some stage insecure, saying that, look, my data is all over the place and digital trails are being left behind, digital exhausts are being left behind. Is there a problem coming for me? Are people accessing information? So the seventh issue or seventh ecosystem change that is coming about in the scene is the governing laws about privacy. And I think in the end, while there was a lot of, let me say, manthan about this whole issue of privacy, in the end, it was really a good judgment, because at least the basic concept of privacy has been established. And all we are asking is, or I think the system is now asking for, is to have a framework about how you will use data and how you will keep it private. Now, when we think of all of these 7 changes that are going around, as I described to you, all of these 7 changes have a significant impact on the way we understand risk. Now, the significant risk, which is often not talked about and which is probably very important in this ecosystem, and even without this ecosystem, is this concept of all black swan risks. Because the black swan risks, if you go back to the traditional concept of black swan, it says the following 3 things. It says, number 1, a black swan event is, what is a black swan event? It says when an event is extremely rare. Number 2, the impact is devastating, or the impact is dramatic. And number 3, after an event has occurred, it is easy to rationalize how that event occurred. Now, these sorts of impact of black swan events can have a significant play in the way we understand risk. For example, the 1929 Wall Street crash was a black swan risk. For example, the global financial crisis of 2008 was a black swan risk, because people did not imagine how the impact will be. It didn't happen for 50 years, but when it happened, the impact was so devastating. And it was also easy to rationalize it later by saying this was a subprime crisis brewing for the last many, many years. And for those of you who probably saw the movie, The Big Short, you'll probably get to see and understand how the crisis played out. Similarly, in the year 2000, dot-com crash was a black swan event, because later, after the event occurred, you realized, oh my God, people are just valuing companies on eyeballs. There was no sense behind this. After. So basically, it's black swan events, and black swan events will keep coming, maybe once in every 10 years or 15 years. When we think of India, and we think of, a lot of people often ask us, saying that, there are so many changes happening, will GST affect your life? Will GST affect your repayment behavior of SME players? Will demonetization impact you? When I look back, I often tell myself that these are events that will continuously keep coming and have always been coming in the history of India and the history of Indian economic period over the last many years. Let me just take you back just for the last 5 years. Not even complicate the issue too much, right? Or maybe 7 years. You had the global financial crisis of 2008, when everything was looking up and down, and you were looking down the barrel. Then in 2010 to 12, certainly there was a lot of policy paralysis. Interest rates are going up. Inflation is going up. Inflation is running at 10% per year, compounded for 3 or 4 years. Can you imagine what that looks like, right? That was a bit of a crisis. 2013, there was a rupee crisis, and then 2014, there was the Indian elections, which was a big event. Then in 2016, there was a demonetization. Then 2017, there is GST. I tell our organization, I tell everybody, something like this will keep happening, which will look very big to you at that point of time, but this is part and parcel of life. It is good, because it stress tests your portfolio, even for these good shocks and bad shocks, large shocks and small shocks, and then the system then keeps going on. When we build our business and capital first, we therefore tell ourselves, these are not the individual events to shock ourselves. We should say, go with the flow. If India is digitizing, go with the flow. It's good for India. If India is demonetizing, go with the flow. Say it's good for India. If India is doing GST, go with the flow. It's good for India. So basically, when we go with the flow and go with these events that come along, we learn to adjust and live with this ecosystem and probably flourish in the ecosystem, not to fight that system. At the same time, things that, as I said, we should be more conscious about, which can have significant impacts in our lives, is examples like I talked about, where we talked about black swan risk. We all know in 2008, at that point of time, it was not a profitability crisis, but many institutions, including mutual funds, were suffering a liquidity crisis. That can be a black swan event. So as lenders, as institutions, as players, to me, these are to be important events to constantly watch out for, watch the horizon, such that we don't miss out on opportunities, and then we don't miss out on these risks as well. So the new age risks emerging out of this new ecosystem are playing a much more important role for us to understand the businesses so that we continue to flourish in the new world than what we were traditionally used to do businesses in the previous world. In fact, there was one quote which very well sums up what I was trying to communicate today in terms of this new ecosystem and the impact on respective lives. It is by the management guru Peter Drucker, whom all of you must, I'm sure, have heard of. It says, what you have to do and the way you have to do is incredibly simple. Whether you're willing to do it is another matter. And I think that really sums up the fact of the new ecosystem that is coming at us and how well we are going to deal with it. Thank you very much, ladies and gentlemen. It was really a great pleasure talking to you about the concept of risk today and how risks are intended or expected to change in the new ecosystem. Thank you very much, ladies and gentlemen. Bye.
Thank you so much for sharing your views, sir. Now, I would like to invite Mr. Biharilal there on the stage to facilitate Mr. Vaidyanathan.